Good morning. It's Friday, August 21st, 8:09 a.m. I am back in Indiana. The last time I did one of these, we were in Kauai. It's been a little while. Came back. Kids are in school. Kids are off to college. There's been torrential rains in Indiana, record-breaking rains where the White River crested above its 1913 previous high. Different creeks and tributaries all did the same. There's a lot of neighborhoods that were flooded, completely submerged in Indianapolis. So thoughts and prayers to everybody there and in the northern suburbs where I live and work in the two northern suburbs. But the uh, the rain was mostly last week, um, from Tuesday to Thursday, Tuesday to Friday, and then we've had some additional rain. The river's kind of crested, but different bridges have been broken. Um, my mom, who lives in Northwest Indiana, outside Chicago, where I grew up, uh, suburb there, uh, they didn't have power for 6, 7 days. And my dad, he had passed away in 2011. Still lives just by herself, and it's like my grandma. It stayed in her house till she passed away, on my dad's side. But she she bought a generator, big generator, a while back. I have a brother, middle brother, who's in the unions, works construction, excavation, drives things like backhoes, and manages projects. He said my mom had bought too big of a generator, and she's glad that she did now because they had this huge power outage. So huge thing that has come through, and it's just kind of recovering from that. I have girls in college. I have one daughter who's 15, a junior. It's her birthday week coming up, in high school. So I went this morning, uh, as part of her birthday week. She went to Starbucks. I'm not a big Starbucks guy. In fact, I'm doing one of my uh, 72-hour fasts. I haven't done one for a while, and I'm on that fast. So I went and got her Starbucks this morning, and I talked to Alana, who's working there, this young woman at the window. She's really pleasant, and the order was taking a minute, so we were just conversing. She said, "What are you doing today?" And I said, "Well, I've got to go to the DMV, and I have a dentist appointment." She's like, "Man, that's a bad day." I said, "Yeah, but at least you get it all out of the way." But I did cancel my dentist appointment because I thought I don't want to be on a fast and have all that stuff. It's just a cleaning, but in your mouth. So I'm going to wait till after I'm done with my fast here. So wanted to talk about the markets and get back on track doing some of these podcasts. I want to write a little bit more too. I'm going to write something this weekend. What I'm going to write is focused on the bond market and specifically the iShares 20-year plus Treasury ETF. It's got a duration of 16 or 17. There's a lot of chatter in the markets right now. People are making fun of Besant they're saying, these twist operations that he's going to do, they're just a small drop in a big pond. I think it's missing the point, though, that it's the move at the margin that matters. And what's going to happen here is I think the fundamentals are supporting a move lower across the yield curve in interest rates. And part of that is you've had this huge narrowing of the differential of interest rates between the US and Japan. So in 2023, the Japanese 10-year Treasury at one point was under 20 basis points. Now it's closer to 3% yield. Our 10-year bond was actually, US Treasury was 5% at its high, over 5% in 2023. It's below that today, 4.7 range. And so the interest rate differential is narrowed. That would normally imply a strengthening of the yen. You haven't gotten that. So you see Bassett pushing on that string, which I think will eventually, the fundamentals will support a move in the strengthening of the yen. And similarly, can't say that right now, in similar fashion, uh, you're going to get in the yield curve in the U.S., the pressure is going to be on the downside because 40% of the CPI is housing and shelter, only 6.3% or so is energy, and only half of that is really the headline energy prices that you see, oil, diesel, etc. So there's going to be continued downward pressure on both CPI and core CPI. In fact, if you use the current housing prices, core CPI would be 1.5, maybe 1.4% as of the latest reading, under the 2% threshold. And as part of, Mike Green really did a nice, somebody posted it in one of our rooms, but he said, hey, this is really bullish because he thinks yields are going to come down across the curve. And he said the next part is worse lowering interest rates at the short end, which we're starting to price out the interest rate hikes. Remember, just a couple of weeks ago, there was a 100% chance that the Fed fund futures market had of worse raising interest rates at the September meeting. Now that's come down considerably. There's not even an interest rate hike priced in. And again, at the beginning of the year, you had 3 interest rate cuts kind of priced into the market. Then we get to the point where they were pricing in 1.5, maybe 2 hikes. Now they're pricing that out. I do think that the next interest rate move on the Fed fund futures is going to be lower. And I think you're going to see the longer term bonds rally here, and yields are going to come down. And precious metals are already sniffing that out. You've seen a big move the week prior to the last in precious metals, and it's kind of followed through this week. That week prior, the GDX, which is the basket of senior gold producers, was up over 20%. It was the biggest move since 2016. And if you look back to that, that was followed by like a 95% advance in the GDX. I was looking at Newmont the last couple of days. Newmont's already back this morning at that 130 level, which was the January high for Newmont. So Newmont is kind of leading too. The GDX is not, back to its late January highs. And the GDXJ, which are the juniors, is actually farther away. So most people would expect in a global market that the juniors and the silver producers would actually lead. That's not happening yet. I do think that will eventually happen. There's some catch-up potential there. You're seeing that a little bit today in Sibanye, which was upgraded by Citigroup. And Sibanye was above 21 at its high in January. And, it's kind of lagged the advance of something like Newmont, but now you're starting to see some catch-up potential there. So in summary, I think that Bessent and the Treasury leaning on the currency markets, leaning on the bond markets, which those operations don't begin until September. I think that's going to help push them in the direction that fundamentals are already positioned to take those markets. Precious metals are sniffing that out. I think other parts of the market will start to sniff that out too. Keep your eye on longer-term bond yields here as as an indicator, precursor, and that should help. A lot of equities that really have lagged the broader market advance here from 21 to the new highs that we've had the last 2 years. So that's my note for today. Hopefully everybody has a good Friday, August 21st. Wish you a nice weekend, and thankful, grateful for everybody that's in our group and listens to these podcasts. Take care, guys. Bye.